It's about that time of day again, folks. Welcome back to your nightly newsletter, boys and girls. Joseph James here. It's Wednesday evening, May the 25th, 2016. Got another exciting newsletter for you tonight. We got crude, S&P, gold, and of course, we can't forget about the euro. We have some interesting situations to look at this evening on the charts. Crude seems to be destined to reach 50. Got a big milestone number there. Just a few ticks overhead right now. The E-mini S&P finally took a much-needed break after 2 days of complete rocket fuel going higher. The gold buyers, the bulls on gold, appear to have ripped control right out of the hands of the sellers. Got a really interesting chart to look at on gold. And the euro, well, back to its old tricks again, going sideways on us once again this evening ahead of tomorrow's trading session. Now, before we jump into the charts and take a look at the plan for tomorrow, I want to remind you guys the only place to watch the full-length version of this newsletter is here on our trading blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, don't forget there's a link in the description of the YouTube video that'll take you over here to our blog at Sideways Markets where you can watch the full-length version. While you're here, if you're not a member of School of Trade, you're not a member of our trade room, and you'd like to grab a free pass, grab your free pass as a guest in our trade room in the upper left-hand corner. In the lower left-hand corner, don't forget to register for our mailing list. All I need is your name and your email address, and then I'm going to send you a verification email to make sure I get it all correct. Then I'll send you an email every evening when our newsletter is ready to be watched. Also, please remember you can download all the charts you see me using in tonight's video by clicking on that link right below the video on the blog. And then over on the right-hand side, you can learn more with me in 1 week on my trial than anywhere else on the interwebs. I get this question all the time. What does it feel like to be a student here at School of Trade? What's included in our beginner, intermediate, and advanced levels of membership? How do we trade? What are the strategies? You can learn all about that stuff by taking the trial membership on the right-hand side of the blog. Now you guys know the deal. Let's jump in and get this party rolling here. Before we look at charts, let's grab the schedule for tomorrow, Thursday, May 26th. Don't forget, Friday is a half day. We have the Memorial Day weekend coming right around the corner here. You better get your plans made. Big weekend coming up in the United States. It is the official kickoff of the summertime season. But we've got one more day here tomorrow before we start thinking about barbecue grills and gassing up the boat and having fun with family and friends. Thursday, May 26th, nothing on the schedule for tonight. We get some minor stuff from our friends down in Australia, but nothing major in the overnight session. We then kick it off tomorrow morning. We got the GDP out of the GB. We got Great Britain's GDP. We're here from the UK tomorrow morning with the GDP at 4:30, and then we're going to hear from the U.S. session, durable goods orders at 8:30, jobless claims at 8:30 before we jump down to 10 o'clock for those pending home sales. So as you can see tomorrow morning, we got some big news out of the UK tomorrow morning, GDP at 4:30. We have the durable goods orders at 8:30. And of course, don't forget jobless claims, your typical situation on a Thursday morning. As you can see, this session tomorrow is front-loaded with all of the big Red Star news. And then we have, kind of a medium, not a big market-moving event at 10 o'clock tomorrow morning, the pending home sales index. Don't forget, news is noise. We trade around the news. We avoid trading news. In fact, I never even bother to look what the news is. I never even take the time to look at what the actual news number comes out as. I know what time of the day they're being released. That's all I need to know. I let the market tell me what type of reaction, and we trade the reaction. We'll be doing that tomorrow morning, live in real time with all of our students here at School of Trade. We open up tomorrow morning, of course, at 8 o'clock Eastern Time with all of our members. Let's jump right in. We get a busy set of charts tonight. Crude is bullish and trying to complete a wedge target up around $50 a barrel, that big round number around $50 a barrel this evening. But we've already tested the measured move, and a big overshoot of that channel tells us the most reliable buying opportunity will be after a pullback to prior support levels below. Crude began the session today trading inside of a range ahead of the inventory report, which is quite frequent on Wednesdays. Then, as you can see, it broke higher on some considerate strength in the afternoon session. The bull wedge gives the buyers a target up around 50. It's about 50.11, 50.10, depending on where that wedge is. But the channel overshoot is a bull channel We have one overshoot. We may see a double overshoot, but that measured move resistance, that's a big, big clue telling us the buyers are either going to take the breakout pullback as it goes higher or have to wait for a pullback to a prior swing and look for a bear trap before taking it back to the highs tomorrow. Sellers need to be careful tomorrow because any pullback will be bought by the swing buyers with an easy target up around $50 a barrel. In fact, moving price lower would really be desirable right now for all the bulls that are trying to get in on this move that really has not pulled back at all yet. We have a few different technical clues right now on the crude. All signs point to bullish, as you can see. First of all, I think the big clue right now is going to be the channel and the wedge. You can see this bull channel, as you can see here right now. Drawing the channel correctly shows us that we now have an overshoot of that channel. Now, what typically happens on a real big, strong overshoot like this is that we end up getting a pullback and then a double overshoot. So that's definitely going to be something to consider here if you're looking to buy this market but don't want to aggressively buy at that high. So look for that price to pull back. Use the top of that channel as support. Also, we also know that we have that bull wedge. And the bull wedge, I think, is really the most important clue this evening. This thing just kept on going. As you can see, the point of that wedge, that is going to be the target for those buyers, and how convenient it is just a few pennies above that big round number at $50 a barrel. I would imagine we get through that $50 a barrel if we do make this run higher here and get to that target up at 50.11. And remember, that target at 50.11 is really kind of a range. It could be 50.15, it could be 50.09, right? It could be a little bit above or below that area. So as we always remind you guys in our trade room, in our trial, in our course materials, support and resistance levels are areas of interest, right? They're not one specific price. So targets will be a front run head of that 50.11 area. Again, 50.08, 50.09, right? That'll be where you'd be looking for the target on the way higher here. Remember when we have a wedge though, wedges are very similar to spike in channels, and we're going to see a spike in channel later on. The most important thing about a wedge in any real strong bull move is to look back in time and look at a prior swing. These are the two most obvious prior swings on the chart, and buyers are going to be looking to buy on a pullback that breaks just below that low and try to get this price going back higher again. Very similar to a spike in channel where we can definitely tell the bulls are in control right now, but do we want to actually buy at the high? Buying high is extremely aggressive. It's not attractive for professional traders. Buying high may make you some money from time to time, but it's not going to be a very reliable strategy over the long period of time. And there are plenty of examples of that, right, throughout every trading day. So we know we want to buy low, and we know we want to buy back at a prior area of support. We assume now that all of these swing buyers are going to be waiting at all of these support areas listed below, just trying to buy this thing as it comes back up. And don't forget, as it pulls back, whenever we have a market that is pushing higher like this, as it pulls back, for example, to an area of support, we're looking for that sequence where it pulls back, we see sellers try to keep the selling going, we know where their stops are, and the first opportunity is always seller failure. That failure, if we hit the vein, so to speak, will lead to strength. That strength will then be bought on a pullback from the buyers and will go back up to revisit that high. Failure leads to strength, strength leads to pullbacks, and pullbacks lead to that new high. The problem is that what we don't know is we don't know how far back is this going to pull back. That's the variable we don't know. It may happen here. It may happen down here, right? We never really know exactly how far that pullback will go. And remember, below each prior swing, you have what we call those swing buyers, right? These are swing traders that are looking to scale into a position, right, with those targets. And again, $50 a barrel is what we're kind of projecting right now. But the ultimate target, though, for those swing buyers is going to be back up at that high. So as this price pulls back, buyers are buying here. They'll buy more here as it pulls back, with a target, of course, to scale into that position as it goes back to that swing target overhead. So we know that's going to be the case going into tomorrow. What if price goes higher? What if price goes lower? First of all, we have the double up and the triple measured move, both right here around that 49.75 area. That's going to be a big variable. If price goes higher, buyers are looking for a breakout pullback, and they're going to use that resistance as support. Be careful, though, if this price does break higher and then pull back below it, because now that will be resistance, and price will try to trap low now to get basically enough room to buy, so you're not buying into that resistance. Most important thing when you have an area like this is just don't buy into resistance. So buyers break out pullback as we go higher. Use that measured move at 49.73 as an area of support. If it does pull back below, you'll have to be very careful, wait for a trap low, and then look for the buy from there. Obviously, the ideal situation would be to get back down around the low of this bull channel, but with such incredible strength right now, it's unlikely. It's unlikely because most likely buyers are seeing the exact same thing that we are seeing, and they're going to be buying these dips as it comes back. Measured move is support, all of these areas as it goes lower. And that's ultimately what makes this so difficult for the sellers right now, because you really don't have a lot of open space here below. You basically only have one option if you want to be a seller, and that is waiting for this market to get high and then sell it at the highs. But now you're selling into a bull market, and again, it's inherently less reliable. What you want to wait for if you're a seller is, if it goes higher, then wait for a new lower low, hold the pullback, and then you can at least look after this market becomes a bearish market, selling it back down. But you get to wait patiently for that. If not, look to get below that low, hold that resistance area. It's going to be challenging here for the sellers, so be careful out there if you're trying to pick a top right now, because this market is clearly bullish here in the short term. How about the S&P? The S&P is bullish and trading inside a range this evening after a complete gasoline, right, 2-day run for the bulls. The range tells us to look for buying opportunities below the range low or a breakout pullback of range highs. This is a pretty simple scenario. The day started with a spike in channel, which broke, just like a spike in channel should. It retested the highs and completed a measured move before price started trading sideways. This is your typical measured move into a range. The range has a definite bullish bias, which tells us to look for seller failures at the lows or breakout pullbacks above the highs with a target up at the next resistance levels overhead. Sellers, again, just like on crude oil, need to be patient because any move below the range is ripe for buying, which means the only option will be, for the sellers at least, to fade a bull breakout, which is dangerous until we reach the resistance levels overhead. This is another situation very similar to crude oil. We definitely have a bullish market on our hands. It just happens to be taking a little siesta right now and going sideways. I'm amazed because you saw yesterday, this thing still has not even pulled back yet. I mean, it's amazing there isn't smoke billowing out the side of this chart right now, because this market appears to be red hot right now. Now, obviously, we're only as good as the short-term trend, so this can easily reverse and come back lower. There's nothing wrong with that at all, right? We are going to let the chart tell us what we do next. Right now, you can see, though, the bulls. Really, there's a couple of key components on here. Very simple. Bull spike and channel right out the gate this morning. And just like a good spike and channel should, it traps low, right? One of the only traps we've seen in the last 2 days. Traps low and then shoots high. Remember what I said earlier, a spike and channel is pretty much identical in the trading strategy of a wedge. If I can draw that a little bit uglier, please, Joe, right? A spike and channel is pretty much the same idea as a wedge, where all we're trying to do in a spike and channel is just get back here to a prior swing and then get going back higher. Same thing that we saw on crude oil. Crude oil, of course, has that wedge, and that's pretty much all we're trying to do on oil as well, is just trap low and get back higher again. It's pretty much the exact same strategy, whether it's a spike and channel or a bull wedge. The big difference, obviously, is that the wedge has a target all the way at the end of the wedge. The spike and channel's target is going back to that high, right? That's the big difference there. But bottom line, though, these are two very similar markets in the terms of the strategy that will be used, right, to trade these. So spike and channel breaks and retests, and you'll notice